Oliver Sloup is with us now, and he's with Blue Line Futures in Chicago. So interesting market action so far in the early going. The only thing that has much of a emphasis to the upside at all is soybeans today. Why is that?
Yeah, soybeans kind of trying to be the leader here. It doesn't take much to be the leader when you get corn rolling over and wheat rolling over like it is. But I think the flash sale this morning probably helped. I think the technical landscape is certainly a lot more constructive for the soybean market as well. We pulled back pretty sharply on Thursday, but we were able to recover some of that on Friday and getting some follow through in today's session. 1450 is psychologically significant, but really 1425 is going to be the area that we're keeping a close eye on. A break and close below there would, I think, neutralize our bullish bias. And corn, on the other hand, that technical landscape has broken down quite a bit from Friday's session. We got the break and close below the low end of the recent range, and that has led to some additional long liquidation from the funds. And there's a gap near 638 that we're keeping a close eye on. I wouldn't be surprised to see that get tested here in the near future.
So do you think this will mean the farmers will now hold tight on making additional sales between now and the end of the year, or do you think it'll ramp them up on thoughts that maybe they may not have this good of an opportunity moving forward?
Yeah, I wouldn't be surprised to see it be the latter. I think you could potentially start to see some farmers saying, man, I didn't get enough sold at higher prices. You know, what if this thing really craters? And that could trigger some accelerated selling pressure. And I wouldn't be surprised to see that continue. We were pretty optimistic on the grains going into the end of the year with kind of a seasonally bullish tendency, but the breakdown in corn is definitely a caution flag in the near term. We've been at elevated prices for some time. The funds have had a pretty large net long position, and the funds haven't been short for several years. And a lot of people seem to have forgotten that funds can go net short the grain markets. We haven't seen it, again, for about two and a half years, but if things start to change here in the Midwest, we get some rains, that could potentially spur additional long liquidation from the funds who are still long about 190,000 contracts.
Wow. Okay. Well, I'm glad you pointed that out.